Hello, everyone. Happy President's Day. Hopefully, you're expanding your mind by reading a good history book and not just sitting there with your phone. But then again, if you're reading a book, you want to be listening to me right now. So maybe I should take that back. Anyway, for those of you who don't know me, my name is the Stock Market Jobber, or Mark. I mean, that's what my mother calls me. Everyone else calls me Stock Market Jobber. But I spent a long time in the institutional trading world. And now I'm teaching people. So one of the things we used to do on Mondays, well, in this case, it's going to be Tuesdays, is because of the beginning of the market or the market opens tomorrow because of the Monday. I mean, is we let the market tell us what to do. We look for things. And the other thing I would like to say, since I've been teaching people in the retail community for the last couple of years, it really astonishes me how many there are misunderstandings of like what hedge funds do or what hedge funds are, what market makers do, what algorithms are, what dark pools are. So if you have any questions about that stuff, feel free to hit me up and I will respond. Wall Street doesn't need to be as complicated as most people seem to think. A lot of retail traders think these great traders have these like super secret systems that always work. And that's just not true. And I know because I've worked with some of the best that there are. I'm not saying I am or was, but I worked directly for Steve Cohen. I mean, the guy who owns the New York Mets now. And I guess he's buying into golf too, but he made mistakes. You know, LeBron James misses shots, Tiger Woods misses putts. You can't expect to be perfect. All right, let's see what is going on in the market because some parts of the market are kind of boring, but I think some parts of the market are going to offer some pretty nice trading opportunities this week. Remember, we got the NVIDIA numbers on Wednesday. So here's SPY. It's trading in a range. Now, what's kind of interesting is that tech seems to be rolling over. This is the tech sector. This is the XLK ETF, right? Look at that. So tech looks pretty weak. The biggest part of the tech sector, well, actually, Apple and Microsoft are in a duel. Apple's testing this important support around 181. If this breaks, meaning we go below it, it's going to tell us that all the buyers who created the support are out of the way. It's a good chance that it does because one of the things I see here that looks kind of bearish to me is what we call lower highs. Notice how this high formed here, this high formed here, this high formed here at lower prices. This is what we call lower highs. It's not just fancy trader talk. It tells us something or illustrates what could be going on. And of course, there's no guarantee. Okay. So I don't have the power of foresight, but I do have a lot of experience in the markets. And a lot of times it's just about playing the odds. And when you see something like this, the odds are, in my opinion, better that it's going to break the support and go lower than it's going to rebound. Because what this shows us is that as time is going by, the sellers are getting more aggressive. They're willing to accept lower prices. Back here, the lowest seller in the market was 200. Here, the lowest seller was 195. Here it was 190. So sellers are getting more aggressive, but the buyers are, for the most part, hanging out down here. So the buyers are just like, yeah, whatever. If the sellers come to us, I'm going to buy. But if not, I don't really care. I'm just going to hang out and, read the latest stupid article about Terrell Swift and Travis Kelce or whatever is currently dumbing down our society. But this is what we call the descending triangle type pattern, and they tend to be pretty accurate. All right, so let's just go through some of these tech things. Well, actually, let me just show you real quick. All right, so the financial sector, sorry. So the financial sector made a little bit of a breakout, but it seems to be consolidating, which is good because if things break out and just rip higher, they get overbought and they reverse. And the healthcare sector looks pretty similar. Could be breaking out, kind of neutral momentum here, or chilling out a little bit at least. If you go up to the State Street website, and I say up because it's in Boston and I'm in Connecticut, but this is the S&P 500 fact sheet. If you trade SPY, you should know this and you should check this out. It shows you the holdings, the performance, so forth. So if we look at our sectors, tech is about 29%, financials are 13, and healthcare is about roughly 13 as well. So tech is going down, but financials and healthcare are going up, and they kind of even each other out, right? And that's why we're seeing this neutral momentum. Now, before I get going, a couple things I want to point out here. One is the basic material sector. Boring. Well, if you think making money is boring, and you know, you're in a better place than me. Um, Check this out. Look at this level up here, 85.75. This first was resistance back in January of 23. Then it became resistance in August. Then it became resistance in December. Now it's resistance again. You don't need to be a market guru to see that this resistance is well defined. Now, why does something get to resistance and move lower? Why does this create trading opportunities? Well, it's because resistance is this large group of people that want to sell, traders or investors or what have you. And they start to sense that other sellers are coming into the market. That's why the price isn't going higher anymore. When markets are going higher, there's just not enough sellers or supply to fill all the demand. So the buyers got to pay up. So what happens when we get to a resistance level sometimes is some of the sellers start to sense that, oh, there must be other sellers coming into the market here. I better reduce the price I'm willing to sell at because the buyers are going to go to whoever is willing to sell at the lowest price. So this starts a snowball effect. Other sellers see this and they do the same thing, and so forth and so on. So there could be some opportunities here. And we could go back up to the same website. And what we were looking at there is the materials ETF. Here are all the sectors, by the way. And there's what we look at is the ETFs of these. Um, so we can go to the materials sector. Oops, sorry about that. And we can look at the companies that are within the sector. I'm not going to go through all these, but this is materials, companies people know but are boring. Air Products, Sherwin Williams, doesn't have the appeal of the AI stocks and so forth, but that means there might be opportunities to be found because if there's less interest in something, maybe you can get a much better premium. All right, so before I go, um, I just want to check out oil because this is on a potential move here. Could be kind of the same thing that we saw in materials. See how we got to really well-defined resistance and we sold off? It's the same phenomena. Even though this is an oil market and we were just looking at material stocks, well, when you look at a chart, what you're looking at is the psychology of the people who are trading it. At least if you look at it the right way. For example, we see aggressive sellers undercutting each other. That's psychology. Why do we reverse off of resistance? Or why do we have resistance levels or resistance for psychology, buyer's remorse? There's people that bought at these resistance levels that when the price drops below, they're like, ah, man, I made a mistake. If it gets back to my level, I'm going to get out of break even. So we have remorseful buyers placing sell orders at the level that was resistance before. Why do we have resistance? Psychology. Why do we sell off of resistance? Psychology. Forget what they're telling you on CNBC or any one of those other stations. All right, now got to look at bonds here real quick because this is a really important thing to watch here this week. Could be like between Apple and this. I mean, those are the two things I'm going to be keyed in on here. Now, notice how support has become resistance. Why would support become resistance? We're looking at the iShares 20-year bond ETF. Well, support can become resistance because of buyer's remorse. The same reason why a resistance level can stay intact. There's people who bought here who thought they made the right move, but then the price goes lower, and a bunch of them say, man, I made a mistake. If I can get out of break even, I'm going to. So when the price gets back up to that price level, it there's resistance there if you have enough remorseful buyers placing sell orders. So what was support here has become resistance here. Now, if after a couple days this resistance doesn't break, then some of the sellers might start to get anxious and undercut each other, and that could drive bonds into a new downtrend. Why is that important? Well, because it will push interest rates higher. And if interest rates go higher, there's a good chance there's going to be some trading ideas here in the utility sector. Now, this is bigger than it looks. Keep in mind the scale. This is at 60, this support, and it's at 61.23. So right there. Anyway, if interest rates go higher, what happens is people sell their utility stocks and buy bonds. So we also got the lower highs here. See, this high was there, this high was there, this high was there, this high was there. So there's a good chance there's going to be some profit opportunities here. So let's forget the exciting stuff. Well, like I said, I don't mind. To me, making money is exciting. Um, Big thing with Nvidia this week, obviously, is their earnings. Stock hasn't really moved in 3 days, maybe 4 or 5 days. So maybe it's stopped going higher. Big reversal in SMCI that could give us a preview of what's going to happen in a bunch of these other stocks. I mean, it was down 20% in one day. Okay, everyone. Thanks you so much. And please make sure you check back in, and I will see you soon.